We're now joined by Anuj Ranjan, CEO of Brookfield Private Equity. Good morning to you. You're actually my first guest of the day, so it's wonderful to have you with us.
Good morning. Thank you for having us.
Brookfield have a significant amount of investments in the region already. Let me just start off by asking you, since you sort of also have this global lens as well, how deal-making in this part of the world differs from other regions?
Well, first of all, it's changing all over the world. That era of passive investing and passive capital is over. And the future belongs to those who roll up their sleeves and are really going to build value in the businesses they own. And that's no different here in the Middle East. I think decades of easy money made investors forget what real investing is. And now they have to create, build, and operate businesses better. In the Middle East, it's exactly the same. You have to be able to bring some experience or some value creation to investments.
So where are companies and founders rolling up their sleeves then? Where are those opportunities here in the region?
It's all across geographically. It's all across the Gulf, and I'd say the broader Middle East.
In specific sectors? In
specific sectors, I would say that for us, we have found to be quite exciting is financial services, education, and industrials, broader business services. The thing is that the great thing about this market is it provides an opportunity to earn emerging markets returns with developed market risk. And so you have this unique opportunity to invest in almost a broad array of sectors where they just haven't had private capital in the past in the same way that they do today.
Yeah. So last year around this time, the PIF signed an MOU with Brookfield to act as an anchor investor for a new vehicle called the Brookfield Middle East Partners. The fund was targeting $2 billion with 50% of its capital allocated to Saudi Arabia. Can you give us an update on this fund?
Yes, so we've, well, first of all, stepping back, we've invested about $18 billion in the Middle East so far. And so we've been investing here for a long time. We're very excited about it. We keep growing. The fund is going very well. And we are continuing to invest in that fund and hope to do a lot more in the near term.
Yeah, we've been talking about how in the kingdom, there's sort of been I would say like a maturity of the Saudi 2030 vision and a shift towards some of the forward-looking sectors, AI, technology. When you see it this year at FII, some of the conversations are around that, about smart manufacturing, and perhaps less so on some of those mega construction projects. How do you see that opening up opportunities?
Well, we really welcome it. AI infrastructure, we think globally, is an amazing opportunity. And people are thinking about AI, the technology, but they're often not thinking about the supply chain resilience that's required, the opportunities to power AI, the opportunity to build the compute that's required for it, or the opportunity to use AI to make manufacturing businesses or old world analog businesses far more productive. And that opportunity, we think there's $7 trillion of investment opportunity globally. A big chunk of that will be here in the Middle East, because I think what's great about this market is the governments are quite forward-looking and quite partnership-oriented when it comes to AI in particular.
Yeah, and how do you see the opportunity for exit in this part of the world as well? Again, we've been covering a big pickup in IPO activity. It looks like that's going to trade a little bit going into the last quarter of the year, at least here in Saudi Arabia, quite intentional on their part. What does that do to exits?
Yeah, look, I think all markets have these cycles that move a little bit. Actually, what's happening with the public markets softening a little bit, probably due to an anticipation of certain very selective pullback of government spending. The truth is that opens up a huge opportunity for private capital. And so we actually look at it as a great time for us to be a partner of choice to governments or to corporates or to families in building out their businesses rather than only the public markets.
Yeah, you say private capital. Let me ask you, so private credit, and this is, there's been an explosion of interest in private credit just over the last year or so. Do you see that as perhaps a competitor somehow in terms of, a company's options to raise capital? Has it edged out some of the private equity guys?
I wouldn't say it's edged out the private equity capital and what we bring in terms of expertise, in terms of value creation opportunities. And that's why I think in this era, where your capital has to do more than just be a source of cheap funding, that's very important for private equity. But private credit, I think there are still many high-quality companies that need capital that's flexible and long-term in nature. and they need that partnership orientation. And there's a lot of investors who want that exposure. And so this opportunity, I think, is already large, and I think it's going to continue to grow.
Okay, so private credit and private equity can continue to grow side by side.
Absolutely.
Okay, so I thought this was interesting. You're launching a private equity retail fund. It launched in Canada a couple of days ago. How much do you expect that to contribute to Brookfield's overall PE business? And can you imagine bringing something like that to the Middle East as well?
Look, we launched on November 1st officially, so it's very early.
Okay, about to launch.
About to launch, but we're very excited about it. And we think that if you look at what's happened in the universe of private companies, 85% of companies with an EBITDA of over $100 million are private. Companies stay private far longer than they did 20, 25 years ago, and the number of private companies outnumbers the number of public companies by multiples. And so this opportunity to attract high net worth wealth investors into a product that can invest in private equity, making those companies available to the broader wealth marketplace is very exciting. We're today focused on Canada and the United States. I'm sure in some time, given our presence here in the region, we would love to bring that opportunity to the Middle East.
Yeah. We're here, and again, at an investment conference, there are so many LPs also participating in this conference. And I wonder whether there is a lot, you've been having conversations or will be having conversations about the rise of continuation vehicles, around this general theme, the struggle for fundraising. What has been the feedback?
Look, I'd say everyone views continuation vehicles, I think, in the same way now, in a very mature way, which is for your best and greatest businesses. There sometimes are these businesses that compound cash in a manner which is very exciting for the long term, and you'd rather own those businesses longer. Most people are very supportive of that approach. I think, obviously, if it's taking away from more natural exits because of valuation mismatch, that's probably not the right way to use a continuation vehicle. We've generally shied away unless we think that it's a great business.
Okay. Let me round up just asking you maybe, looking ahead to 2026, what are you seeing for deal making? Are you feeling good about the year ahead?
I feel like the deal activity has picked up dramatically. I think the valuation gap has started to really shrink and make deal markets more viable. At the same time, the financing markets have been very strong. And I think we as groups, most of us, have thought about areas that we want to focus on where we can add real value. Power, AI infrastructure, industrial companies, payments. These are areas that we know that we have an expertise and we can do more than any other owner could. And that gets us very excited about investing in this market.
Yeah, and when do you expect fundraising to pick up again?
It's funny, for the fundraising as a broad brush has been muted for the industry. But I think when you are a strong sponsor with strong relationships and you have a deep expertise in something, it's been just fine. And for us, we've actually continued to raise increasing amounts of capital from our best partners and supporters. So I think that trend will continue. I think that LPs wanting to do more with less will continue. And I think we're very pleased to, in our sectors that we know the best, be a beneficiary of that trend.
Anuj, thank you so much. A real pleasure talking to you today. That was Anuj Ranjan, CEO of Brookfield Private Equity.